Gold and silver crash. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because gold and silver have crashed significantly. It's been a big move. Now, it's been predicted by some people, suggesting that gold and silver have been overbought. Before we go through a few articles discussing it, let's jump over here to trading economics. We can see silver is down, nearly 15%, down to 24.80 at the moment. And it was up at, it nearly breached $30. It nearly breached $30 at one stage. We can look at gold as well. It's down at $19.14. So it broke through the $2,000 level like it wasn't even there, everyone. That was a big psychological milestone. And, hoping there would be some support there, but it didn't exist. It didn't exist. We can have a look here at the gold-silver ratio from goldsilver.com. You can see here it's climbed up. It's climbed up again, but then again, it's nowhere near at the levels where it was in the past. So it's at 76.71. And if we have a look here, we can see just the chart. I mean, we're down 26.23%. So it's been a big move in gold. A big move in gold, everyone. Let's have a look and look at some articles to see what people are saying about this. And while we'll do that, I'll bring up this this chart here. Here's how gold price lost over $100 in one day, and why this is your second chance to get in before new highs. So, this is from Kucoin News. Gold and silver prices took a big step back on Tuesday as the highly anticipated price correction hit the precious metals market hard. Gold retreated more than $100, and silver shed nearly $4 in just one day. And, well, I'm looking at silver now. Yes, over $4. The sell-off, which was made up of profit-taking and new risk on sentiment, accelerated Tuesday afternoon. December COMEX gold is trading at $19.25, down 5.6% on the day. And the September COMEX silver is at $25.45, down 14.39% on the day. And silver is now at $24.87 as I look to my other screen. The move down is not too surprising, as many analysts have been calling for a price correction after gold breached $19.20 an ounce, and then $2,000 an ounce, and then continued to make new highs above that level. And all of this is just in under 3 weeks. The precious metals complex, which posted a spectacular performance over the summer, was driven by a drop in rates, a steady increase in inflation expectations, and a falling USD. TD Securities head of global strategy, Bart Mellick, said on Tuesday. The turnaround came when the US dollar showed some strength and real rates reversed directions. The rally is now giving up some of those gains as the drivers lose momentum. Real rates are now rising, along with nominal yields, due to stimulus optimism and risk appetite, with the US dollar also off its lows, he pointed out. Most of the interest in gold this summer is coming from Western retail investors, and I think we're seeing that, which also means that profit-taking is very much on the table. Specs and CTA are reducing their gold and silver exposure as volatility trends higher and as they take profits out of a crowded trade. The rapid rate of ETF gold and silver purchases, which have been a key driver for the summer rally, are also losing momentum, TD's Mellick stated. Given that the US economy will continue to positively respond to an additional $1 trillion worth of fiscal stimulus and continued Fed measures, it is quite likely that rates and the dollar may see some better days into 2020. Gold could even drop as low as $18.19 an ounce before starting to climb back up, Mellick pointed out. For silver, that low number could be around $22 an ounce. Given the technicals and the fundamentals, it would not be surprising to see spot gold trend down to around $18.90 an ounce, and silver $22 before hitting new records, he said. The best news in all of this is that investors have a second chance to get into the precious metals market before prices start hitting new record highs again, which they are likely to do this year and next year. Correction represents a second chance to get on the gold-silver bandwagon, he writes. TD Securities projects for gold an average of $2,100 an ounce, and for silver an average of $30 an ounce during Q4 2021. However, before these levels can be reached, investors should pay close attention to the Federal Reserve and any possible yield control. Before the complex hits new highs at $2,130, there will need to be confirmation that the Fed will indeed suppress yields, consider average inflation targeting, and there are signs that inflation may move higher. At the same time, markets will want to see if monetization of debt is in the cards before talk of these levels become sustained is credible. TD Securities projects an average gold price of $2,100 an ounce in Q4 2021 and $30 for silver in the same period. So we have another take on this. We'll jump over here, and this is from FX Empire. Gold price forecast, gold breaks down. The gold market collapsed on Tuesday, slicing through the $2,000 level like it was not even there. This has been desperately needed as we race towards the gap. If you remember from my previous video, I've suggested there was a gap near the 1950 level that needed to be paid attention to and still needs to be filled. That was the area I thought we could see buyers return if we slice through the 2000 level. But quite frankly, I did not expect to see that happen so quickly. This move happened in just a short hour or two, basically. But nonetheless, this is a market that has gotten far overstretched. Now, if we jump over to, have I brought this up? Well, we can see here, I've got in Trading View, and you can have a look at all these charts for free, everyone. You can see here you've got the RSI indicator, and this is indicating when it's overbought, when it's above this level. At least that's my my very primitive investigation of trading. But look at that move, guys. Look at that move. That's a big move. And we have, what do we have released here? You've got PPI, ex-food and energy. You've got Jolt job openings. We've got CPI. A lot of stuff has come out. So people have more appetite for risk. So keep in mind that the gold market has been on fire as of late, so selling off the way it has should not be a huge surprise considering that it is a small market. After all, if a huge player comes into the market and looks to take advantage of profits, that can kick off a lot of algorithmic trading and cause a bit of a chain reaction. SAM's quite a bit in the futures market, and it's a smaller one like the precious metals market. It tends to be a bit exaggerated. After this absolute shellacking during the day, I think there will be a lot of traders out there they're looking or licking their wounds, and this could set up for a nice buying opportunity perhaps later in the week. I would not jump into it right away, and I think that the 1900 level will be crucial to pay attention to. If we can stay above that level, then it is only a matter of time before buyers return and break back over the $2,000 handle. And as I'm recording this, we're sitting at 1906, so could gold breach 1900? Could it head right back down to 1800, guys? Could we see that? So there we have it, everyone. Gold has taken a bit of a hit, a few different perspectives on it. I mean, here's the thing. From my perspective, I consider it a long-term hedge against, well, hyperinflation. So it's not like other things, trading. I guess if you're trying to play the market and take advantage of these moves, what is it, intraday trading or swing trading? I mean, these are opportunities. These are all opportunities. It's something I find I get too emotional and make too rash decisions. So I'm forcing myself to be a lot slower. And in some regards, that's what I like about precious metals. It's a pain. It is really a pain to liquefy a bit of gold or a bit of silver, and that's kind of the point. Whereas, playing the market, you've got to watch it and you've got to really get into it. I can see how some people could really enjoy it and how it could be quite exciting. But today, this is looking a lot more like crypto than it is like precious metals. A huge move like that. And we'll have to see. Let me know in the comments, where do you think it will finish? Do you think we've hit the trough, or do you think the trough will go down to 1800? All the TA gurus, let us know. And before we jump away, let's have a look at CoinMarketCap just to see how Bitcoin is responding. Well, Bitcoin is now down to 11.2. It's lost 4.8%. Ethereum is down 4.8% as well. I need a shot of coffee. So the arguments that Bitcoin is a non-correlated asset, do they still hold water at the moment, guys? Well, thanks for watching. Let me know your thoughts and opinions in the comments. Are you a gold bear or are you a prepper stacker, you know, in the new bunker you've built and playing Fallout 3 on repeat? No, sorry, not Fallout 3. What am I thinking? Far Cry 5, that's it. Anyway, everyone, have a great day. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy a merch from HeiseSays, use a gold pass from the Perth Mint, or support us via PayPal. Take care, everyone. I will see you in the next episode.